Well, good morning, everyone. It's September 24th, last week of September. Let's talk about the markets. Again, U.S. markets are higher. Why? Because U.S. Treasury Secretary confirmed once again, probably for the 20th time in the last year, that U.S. and China are going to resume their trade talks. Will it resolve anything? I have no idea. Here's what you need to know. The longer it takes for us to resolve these trade talks, the better it is for China, because elections are coming up. And it's in the best interest for Trump and his camp to resolve these disputes before the elections. China, it's not in their best interest. So China wants to push these as much as possible forward. They're being a little passive aggressive about it, and Trump is not happy about it. Trump wants to resolve this yesterday, and China wants to push this as far forward as possible because they'll get a better deal that way. So that's the dynamics right now. So this whole business about meeting again in 2 weeks, I don't know about that. Next thing that's on the table, and again, till we resolve this differences with China, don't expect a raging bull market. It's not going to happen. Expect more choppiness, sideways trading action, and keep your eye on small caps because that's what's going to move first and put the pressure off the large caps. The small caps started decline first because there's much more vulnerability to China with small caps than large caps, and small caps have to start rising first. Look for the Russell 2000 to start trading above the 50-day moving average consistently, then we'll see the large caps like S&P 500 take off. That's number one. Now, officially earnings don't get underway for another few weeks. Bank stocks are going to start reporting, but believe it or not, we have started trickling in the numbers already. We're not expecting a really strong earnings season. Overall, we're expecting the numbers to be 4.8% higher we're looking for the percentage to be about 4.8% lower on 4.2% higher revenue. All right, so slight upside and slight downside. Basically, we're not expecting anything major to happen with earnings. Here are the three companies that are reporting in the next few days. We got Micron, high target is 66, low target is 28, medium target is 48. The stock is near all-time highs right now. I would keep my eye out on the 51.39 level. We're right now at 49.60. We're near all-time highs. If we take out 51.39 before earnings, before earnings are announced, the odds are the stock is going to go higher. Second one, CAG, Conagra Brands, also expecting earnings. The 52-week high is 37. We're at 28. We're right in between right now. Not expecting too much from this company. The high target is 40. The medium target is 34. Low target is 28. I would expect the numbers to come somewhere in the middle of a range. Don't expect this stock to make all-time highs anytime soon. And lastly, we have Nike. A lot of guys are looking at Nike. 52-week high in Nike is at 90. We're at 87.67. We're just a little bit away from 52-week highs. The high target's 108. Mean target's 93. Low target's 70. If you look here, we have had a positive surprise the last three quarters. We've had positive surprise the last 3 out of the last 4 quarters. The last one was negative. Because of China, we may be seeing a more slide down, more downside. So again, don't expect anything major. Don't expect this earnings season to be a maker or a breaker. We're not there right now, especially with China putting pressure on U.S. companies. Again, keep your eye out on Micron, Conagra Brands, and Nike this week. Those are the three big stocks that are going to be reporting before the earnings season officially starts with bank stocks. I'll talk to you guys later. Don't expect a runaway market. Expect a lot more choppiness and trading range before markets go higher. Higher prices are just not in the cards unless earnings are so much better than anticipation that it just blows everyone out of the water. And it's early to tell, but I'm just not seeing it. It's unrealistic to believe that, because China has begun taking its toll on large cap stocks. It's just that simple. There's no way to avoid it, especially on consumer stocks like Nike that has a lot of cross currency contamination with China. Keep your eye out on semiconductors. They're going to be reporting, and semiconductors tend to lead the market. There's also a lot of cross-currency contamination with China, so it'll be really interesting to see what they say. I'll talk to you guys tomorrow. I hope this gives you a nice little broad overview of what's to come. If you guys are enjoying this, if you're getting something out of this, if you guys are benefiting from this or making money from this, send me an email, support@marketgeeks.com, or like this channel and put comments. I'll respond. I always do. Talk soon. Take care.